Imagine a world where the very lifeblood of industry and transportation suddenly becomes scarce and dramatically more expensive, almost overnight. What would happen to global economies, and how would ordinary people be affected? This is precisely the kind of seismic shift that occurred in the late 1970s, with profound and lasting consequences. The economic consequence of the 1979 Iranian oil loss was a severe global oil price shock, triggering widespread inflation, economic recession in major industrialized nations, and significant shifts in energy policy and international relations. The disruption caused a sudden imbalance in global energy markets, leading to panic and a rapid escalation in fuel costs worldwide. The primary reason for this drastic impact was the supply shock from the Iranian Revolution. Iran, a major oil producer, significantly reduced its oil exports as political turmoil escalated. While the initial drop in production was about 5% of global supply, the psychological effect was much larger. Oil prices, already high from the 1973 oil embargo, soared further. This scarcity was exacerbated by panic buying, as countries and companies scrambled to secure supplies, driving prices up from around $14 a barrel to almost $40 a barrel in a little over a year. This massive increase in the cost of energy rippled through every sector of the economy, pushing up manufacturing costs, transportation expenses, and consumer prices. Countries and businesses responded in various ways. Governments implemented energy conservation measures, like lowering speed limits and encouraging carpooling. Industries invested in more fuel-efficient technologies and explored alternative energy sources, beginning a long-term trend towards energy diversification. Central banks, particularly in the United States, were forced to adopt very tight monetary policies, raising interest rates significantly to combat the rampant inflation, even if it meant risking a recession. This was a critical turning point, where the focus shifted from managing demand to ensuring supply security and price stability. A key insider detail from this period is the concept of a price ceiling versus a price floor for oil. While the Organization of Petroleum Exporting Countries, or OPEC, had some influence on setting prices, the 1979 shock demonstrated that geopolitical events could override these mechanisms, leading to a scramble where the market effectively set a new, much higher price floor due to perceived scarcity, regardless of formal OPEC agreements. This event also cemented the term stagflation in economic discourse, describing the unique combination of stagnant economic growth and high inflation that plagued many economies. Ultimately, the 1979 Iranian oil loss underscored the vulnerability of global economies to disruptions in energy supply and prompted a fundamental reevaluation of energy policies and economic strategies. It highlighted the intricate connection between geopolitical stability, commodity markets, and domestic economic health, forcing nations to develop more resilient energy infrastructures and more robust monetary policies to navigate future shocks. This period remains a powerful lesson in the cascading effects of global events on our everyday lives and the necessity of adaptability in the face of economic uncertainty.